Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Monday, the 12th of December. Starting off with the FTSE 100, which is just bouncing or trying to bounce off this rising trend channel from back in October. The level there around 74.30, just to be safe, just below Friday's support. And above that, we're looking for at least a retest of the December resistance around 7600. That's the key level that needs to be broken. An end of day close above that, which at the moment looks rather difficult, could take us up to as high as 7800, maybe as soon as the end of next month. RSI still in the upper 50s, which is good in terms of being above neutral 50, and while we're above that, we've got the chance of a rebound for this market to get back up to the higher levels of 2022. The 200-day line, I suppose you could say that it's just starting to rise. You've got the 50-day line rising quite well, but let's see how we go the next few days, whether we can remain above 74.30 and then make progress to the upside. Still very much open in terms of the bullish scenario. If we break 74.30, the 200-day moving average at 73.20 is the next level down. Moving along to the DAX, and here we've got a situation where it's sort of similar to the FTSE. We've got a rising trend channel there from the end of September. The recent support around 14,200. Above that, on an end of day close basis, looking to break the 14,600 area, which was recent resistance, and above that we get an end of day or a weekly close above that up to as high as 15,600. Now looking at the end of January for that. We've got the 50 and 200-day moving averages crossing. They're doing that, well, they did that, I suppose they did that on Friday, and that might give this market a bit extra momentum to the upside. RSI still well above the neutral 50 level, so we are half full rather than half empty at the moment. On to the Dow, and here we're mirroring what we're seeing at the DAX and the FTSE. So right at the bottom of that rising trend channel from the end of September. Recent support 33,400, and while we're above that on an end of day close basis, looking to break the recent resistance at 34,500. A break of 34,500, which at the moment seems rather difficult, would get us up to 36,000, hopefully by the end of next month. On the downside, the 200-day moving average at 32,400 would be the level that we would sink to if we can't maintain recent momentum. RSI right on the 50 level, so really today is the crucial day in terms of either a rebound or heading back down to the 200-day line. The other point to note, I suppose, is that we had a narrow bull trap through August resistance around 34,300, so that is a negative, and that makes the Dow slightly more negative than the FTSE and the DAX. On to Bitcoin, and are we hoping for anything better than we've had for the last several weeks? Let's have a look now, and here you can see that still struggling either side of the 17,000 area. Really need to break 17,400 to give us the chance of getting back to 18,000 or 18,500, which was basically the post-June support for this market before the FTX debacle came in. The RSI not looking good at all, in the sense we've had multiple failures at neutral 50, and that tends to be a leading indicator on the downside, as was or as are the failures that we had there at the end of October, beginning of November, towards the overbought area of 70. So 70 was the failure before on the RSI scale. Now 50 looks like the failure. So just on an RSI basis, it looks as though we're heading lower. 15,500, the initial support there, November support, and below that a June support line projection, heading down towards 14,000 as the target over the next 4 to 6 weeks if we stall for much longer below the 50-day moving average there at 17,800. Moving along to the stocks, and one of the most followed situations at the moment is Angus, and that has been the case for much of the autumn. Here it looks as though we're just trying to break that line of resistance there from October. That's around 1.9 pence. We've already had a positive sideways shuffle along the 50-day moving average, so intraday support coming in there. Hammer candle on Friday as well. So look, just the first signs of something better happening here. If we can break through 2 pence convincingly, then the next level up would be towards 2.4 pence, which is post late September resistance. Here we've got the opposite of the Bitcoin situation, so multiple bounces at RSI 50 and that tends to be a leading indicator on the upside, quite logically. This stage, early and end of the day close back below 1.8, or if you're able to give it more width, down below 1.7, really delaying the upside scenario. Best case scenario here would be a move towards 3.5 pence over the next couple of months, which is the top of a rising trend channel from back in June. But still a little bit of work to go there, even though we've got that very encouraging RSI configuration. Moving on to Bradda, and here we've got a stock which has gapped up off the lows with a very strong candle there. It looks like it's also a bear trap gap reversal. So we've had a bear trap from below October support at 7.25, went down briefly to 7 pence, and above 7.25 looking for at least 9 pence over the next couple of weeks. Best case scenario here by the end of next month would be up to 12 pence, which is the top of that triangle from back in June. So looking better there. We've had an RSI support line bounce, which is also looking quite healthy and gives us more confidence, along with the bear trap and the gap to the upside. On to Caracal, which is another much followed situation. More funding news here. Here the key thing is that we hold above the top of that gap there, 0.65 on an end of day close basis. If you want to be fussy, 0.62, which is the floor of the gap itself. We did have bullish divergence going into that move, that brief spike up towards 0.9, and we've had the issue here that any moves towards 0.9 have been sold into, and this has also been one of them. But ideally, we hold above the mid 0.6s and the 50-day moving average at 0.66 ahead of a potential move and another move back up to the 0.9 pence area. But slightly disappointing that we haven't been able to sustain the 200-day line at 0.77. Let's see if the shares can manage that later in the month. Hvivo is the next contender, and here you can see that we had a hammer candle midweek last week, managed to break above the 200-day moving average now at 12 pence, and above that looking for a retest of 14.5 pence. Ideally by the end of this month. We've got an uptrend line in the RSI window, a bullish divergence line, so that should keep the shares on the front foot over the near term. Above 14.5, looking for 16 or 17 pence maybe early in the new year. But the key here is that we hold the 12 pence area and the 200-day moving average. On to Harvest Minerals, which has been making positive noises on a technical basis. The positive noise last week was that we broke above the 50-day moving average. We also had an uptrend line, or have an uptrend line in the RSI window. So the longer we stay above the 50-day line at 6.8, the greater the chance of a move, firstly towards the top of that channel from September at 9.25 pence, maybe over the next 1 to 2 months up to 15 pence, which is that July resistance line projection. You can see also there's the 200-day line resistance at 11.5. But going for a turnaround here, off the back of the pretty positive configuration that we've had over the last 3 sessions, above a now rising 50-day moving average. This stage only well below the 50-day line at 7 pence, really delaying the potential recovery situation. One of the better situations in the recent past, at least from a charting perspective, has been Mobile Tornado. It's done everything you want it to do. I break a falling wedge there at 0.8 pence, break the 200-day moving average at 1.05, and then hitting our initial target around 1.7. Above 1.7, we're looking for that resistance line there from April 2020 as high as 4.5 pence by the end of next month. So a nice turnaround there for Mobile Tornado. News today has driven the shares of Oriole higher with an unfilled gap to the upside. It's a bear trap gap reversal, one of our more favored setups. The bear trap from below November support at 0.11, above that looking for the shares to head back towards 0.2 pence late October resistance. If you're cautious, you wait for an end of day close above the 50-day moving average at 0.13 before assuming that the worst here on the downside is over. We do have an uptrend line in the RSI window, and that's holding even though we had the bear trap and the lower low there below 0.1. So it looks as though Oriole giving itself a good chance of a turnaround. On to Physiomics, which I sort of feel I rather regret I didn't cover earlier, but here we are. We managed to break that line of resistance there at 2.6. We had our target there at 3.8, which will hopefully be hit sometime later this week. If you're looking for the next level up, then that is about to be delivered with this line of resistance there. So above 3.8, looking for 5.8, which is a March or February resistance line projection. This stage only back below 2.6, really delaying the upside scenario. You can see once again another situation where bullish divergence was the harbinger of a potential turnaround for July to October. So that did actually work as a leading indicator. On to Rockfire, which has had some decent news today. Here we're trying to grapple with that 50-day moving average at 0.17. Want to see that the stock break above that. If we can do that, then we're looking for the line of resistance from back in June around 0.21 as the initial target, and then filling the gap up from there, from the gap down there from October 0.25. So above 0.17, 0.21, and then 0.25 for Rockfire, perhaps 0.25 by the end of next month. Moving along to the last two stocks today. First one is RUA, and here we've had the classic wedge break. That was at 33 pence. We've got bullish divergence leading into it. Looks like a gap close there as well. Bear trap reversal, and initial target here up to 42 pence, which was October resistance. Best case scenario target over the next 1 to 2 months as high as 60 pence, which seems rather ambitious, but the shares have got all the hallmarks with the bullish divergence and the falling wedge break of a potentially big move. If you are cautious here, you wait for a decent end of day close above the 50-day moving average at 36 pence before assuming follow through on the upside. Finishing off with Sosander, and here you can see that we've had a trend line break. We've highlighted this before in the recent past because we had a bear trap gap reversal. Unfilled gap to the upside there back in October. We've never had to test that support area again around 15 pence. That suggests that we're on a runaway move, a move that should have legs, and it's already had legs, I suppose. Looking at where we could head above the 20 pence area, looking for 40 pence, which is a July resistance line projection at the top of the 2022 broadening triangle. That's it for me today. More updates tomorrow.